and welcome to another episode of YPO Presents. I'm Ekaterina Walter, Marketing Director at YPO, and today we're speaking with YPO member Christoph Maichel. Now, Christoph is a serial entrepreneur who founded, grew, supported, and managed innovative companies in a variety of industries. Christoph is co-founder of Credit Shelf AG, the first fintech in the German prime standard. Before starting Credit Shelf, he was CEO of Trevera, leading the asset management for the real estate portfolio in Germany. And he relocated to Germany after he had founded the International Business Academy and Efficient in Guatemala, where he lived for several years. Christoph is a senior advisor for STS Capital Partners and frequently engaged to consult for banking, real estate, services, and energy corporations. Welcome, Christoph.
Thank you so much for having me, Ekaterina.
We're happy you're with us. Now, before we get started, we'd like to remind all of you watching live to ask our guest questions by posting them in the comment sections below. And if you're not following us already, please do so you can receive notifications when our next episode begins. So, Christoph, what is fintech and why are you focusing your efforts on it?
So fintech is actually a short term for financial technologies, and that term was coined in the last 10 years when more and more companies besides the banks started popping up. I don't know exactly who coined it, and I rather joined already at the very beginning when I think the fintech term as itself didn't exist or nobody used it. So I really like the opportunity to entering a boring classical industry where nobody thought that the next big things of innovation might be coming from an industry which has been around for hundreds of years. So that makes me excited to talk and work in fintech all the time.
Well, so tell us, what are the biggest trends you're seeing in fintech that will dramatically change the way we do business or engage with businesses as consumers?
So I think, unfortunately, as this is live and we need to speak today, I have two answers. The biggest trends everybody was talking about in the last years are blockchain and artificial intelligence, probably AI. I think we as fintech companies, many fintech companies, were a little bit in a bubble of happiness. We didn't have the issues of the banks, and we were helping them, we are cooperating, and we talked about the next big thing to come, the changing the world, the trust and the assets and the possibilities of knowledge. With right now Corona around, I think we're coming back to more basic questions, and I can see that with banks reaching out these days and the questions asked by everybody. We had to learn very quickly, pretty much all over the world, to stay at home. And we need to interact, and even our financial transactions will go online, will become distant. So the questions currently on the major trends from fintech are about customer interaction, perception. Hey, can we have a new front end? Who does the customer interaction in an online way on distance better? Banks will be asking for things like the interface and how, for example, do co-browsing with their customers, which has a lot of challenges for the privacy and the interaction with the customer. So in short, four things: customer interaction, AI, blockchain, and one thing is the whole approach of marketplace, where new companies facilitate the interaction between consumers or between sellers and buyers without actually offering the service completely themselves.
Interesting. So talk to us a little bit more about one of them, for example, blockchain, right? It's an interesting but yet sometimes controversial subject. What do you think? Where do you think that's going, and how will that impact the industries you mentioned, banking, for example?
Yeah. So in the first place, I think blockchain is a confusing term. So I like to tell people, don't think of it as blocks and chains. Think about it as a trust protocol. And the trust protocol, getting trust back into the interaction with banks. Basically, blockchain is a distributed ledger. Everybody can see who has done something, when was something created, what what is the file? And imagine yourself, perhaps down the road, people will have like blockchain birth certificates. So you get a lot of the problems which we currently face, third-party risks, fraud, and all the other things which affect the industry and drive prices and interactions, will be driven away by blockchain. So it is the opportunity for us to generate trust in an online world.
So you have a positive outlook when it comes to blockchain then?
Absolutely, only positive, and I think it's a technology which can't be stopped. And I think even the current environment will help the distribution of it a lot. And they're being very clear. I'm not talking about digital currencies. What happens with Bitcoin and these things which are mainly mentioned in press, this is just one small little implementation, some part of and the first showcases which we have. I'm talking about how we can start trusting each other in an online, distant world.
Yep, that's a good point. So let's get to the sort of to the most question that I'm most interested in. So what is your advice? I mean, based on everything you said, what is your advice to global leaders on this front, right? What changes should they make, if any changes, and how should they make them?
So actually, these changes haven't changed much for me in the last weeks. I think it's still always the same advice. First thing is changing times. There's interaction with the customers have changed. I like to take the example of these shared services, shared rollers, scooters, bikes, which we can rent in the bigger cities. At least we could until 2 weeks ago. I haven't checked. But these services, if you ever tried out one of these services, you walk by with your smartphone, you take a quick picture, you become a customer of that company within a second. They bill you, they charge you, they know who you are, they know where you're going, and you can use their service right away. I haven't seen one of these services where it took me more than 1 minute to sign up with them. So this is what we're looking at, and this is for every business in the world. Look at what time you need to onboard a new customer. This is your core KPI. So that's something you need to implement today. Start looking at how much time do I need from the first contact, the first opportunity to sign up a customer, until I have him on board and can charge him something. And actually, the same goes for firing the customer. Become quick losing customers. That's another, I think, great advice I've followed in my business for many years. And then with the environment, again, the same advice, which is helpful too. Start unlearning. We can unlearn physical meetings, and we can learn to adapt to the situation. And this is for every situation. Our fast-paced world outside has changed even before Corona a lot. So keep on unlearning and make it a core resource of your business. And then for your business itself, there's one big word, the API world, the application protocol interface world, API. API means nothing else for me than put yourself in the middle. Make it easier for your customers and your suppliers to connect with you, and create a digital interface of your company to the world.
You know, you talked about, I think, quite interesting topics, right? You said onboard your customer and fire your customer. What about in between, right? It seems to me that nurturing your customers, you know, the solutions that you talked about and trends you talked about, they help with that pretty effectively, right? So what about that middle?
I mean, in the middle is your service. So I think it depends on your business, and in the middle is your service. And there, I don't have any concrete advice, but I believe if you know your business and you know your service, keep on improving.
Yep. Great advice. So Christoph, Forbes contributor Bernard Marr says that big data and artificial intelligence, like customers' behavior and, for example, social and browsing history, will enable financial institutions to hyper-personalize marketing experience on an unprecedented scale. So, for example, as regulated industries, what are ethical implications or risks that type of hyper-personalization pose, right, to the institutions or the consumers?
So it is, there is risk. There's risk in the knowledge, in the data, in the transparency, in everything which is available about us. I mean, and again, today, these days, we see tracking apps where we can figure out who has met who and is there a chance he has corona or not. This level of control, which is possible through technology in our societies today, is a big risk for the freedom of our societies and our lives. I don't want to deny that. But as you're asking specifically for the highly regulated financial services industry and for banking, I think there's a chance that banks will know a lot more about us, but on the same time, with the regulation and the risks of data privacy acts and problems in this environment, I can't see any interest in a financial services company to really abuse the data they get from you. It is way too risky for them and way too dangerous for the core of their business. So I think in our business and in our industry, we are the ones who really need to protect customer data in the first place.
So what changes should companies make based on what you said? Is there one specific step or action that stands out?
Yeah, it's something which has been always the same advice to CEOs, but it becomes a little bit different. So the first is know your data. You got to know what data you actually produce. We are producing data with this call. People are producing data by joining this call. Your company has so many data points you're not aware of, and these data points become visible to the other parties, and a lot of other parties can use that data. So be knowledgeable about what data you produce and what signals your data sends, and from there, by behaving ethically and running rightly and managing my data in the outside world a little bit better. That's actually all we can do and we should do.
And so let's go back to one thing you said, and that is philosophy of firing your customers. So I know there's a school of thought, right, that says firing the customers that maybe bring 10 to 20% of your revenue, but take up 80% of your time, probably actually frees you to bring new customers and service the rest of them better, right? So there is definitely that school of thought out there. Now, Kerry on LinkedIn is asking, but especially in the current environment, can businesses afford to fire their customers?
That's a great question. Can they afford? I mean, I don't know. It's a dangerous thing. It's actually it's a better question to a social media expert. We have the current case of Adidas in Germany, who just leaked out that they wanted to not pay rent for 1 or 2 months to their landlords as the multinational company, and just postponed the payments. That was the news, and the company dumped. So I think firing the customer in today's world is a careful process, and it's nothing you should just do based on some quick data analysis and that you're losing money on this or the other. But it needs to be a process which I believe should be implemented still, and even at times too.
Well, so let's shift a little bit. So in a recent Forbes article, we learned that the coronavirus has driven a massive 72% rise in the use of fintech apps in Europe. What do you think about that?
Oh, clearly. I mean, this is coming. Unfortunately, people only look on the app side. So app is what is physical, what we can interact with, and what we know. So we seem to understand. The drive of the implementation of digital services as a whole with Corona will be massive. And then you have differences on how Corona will impact the split in several levels fintech industry. So payment, for example, they say, oh, this will drive the payment industry. As of today, we can see that actually the payment numbers are going down. So as we have less interactions at less point of sales, there's less sales for the payment companies. This will work out over the time span. That's nothing we need to worry about. But payment industry as a fintech company is hit heavily these days. Credit platforms like my own business, which I started 5 years ago, they're still very unclear if we'll go into a credit default story where we'll have a lot of problems. I actually see that our technology and the demand will help right now to improve the quality of credit. So credit platforms are a winner for me. And so it goes through. It's tough to give a generalized answer, and these things are too much long term to make a prediction in times of crisis.
Okay. Well, but will this increased use lead to a cashless society?
Depends too, in the sense of Germany, we're probably the most cash-driven society in the world still today. I know that worldwide people look at Germany as pretty advanced. For cash, we love it. And I haven't seen, and I never understood really why businesses don't move cashless more quickly. There's still too many businesses out there in Germany which don't even accept credit cards. And so I think the main driver of cashless will be the governments, in the sense of do we allow tax evasion? And I think the main driver for still having cash around for many of us is that we feel protected and safe and a little bit, more or less controlled than with the digital technologies when we use cash. So we will see. It might even be that it turns completely the other direction with Corona. Cash might be a thing where we believe again, we trust it more, and if I don't have electricity, what a lot of people start fearing around the world, then I better hoard cash than some numbers in my smartphone.
But so with the implementation of robotic process automation, how will workforce be impacted, right? What do you think about that?
It will be impacted. It is in the old days, and for many years, there are these doomsday experts who keep on telling us that everybody will lose their jobs for the new technologies coming in, and then the typical question is asking for the low-skilled employee, how he's gonna lose his job. Sticking to what I know, which is the credit industry, one of the most expensive jobs and the most highly skilled people we have in our industry are the credit risk officers. And I actually believe that the credit risk officer job is the job which will be stolen by the machine and the AI in the first place. So yes, doing these analysis is something to lose. So there's a chance, and that's the swift to earlier days. Not the low-skilled people will lose their jobs first. It's a lot of the high-skilled people who will be in the situation after 20, 30 years of their career to find a new job. And I like to think positive. There is always innovation, and the human creativity is amazing, and we'll find new ways to drive growth and jobs for people. But on the same time, the subject of universal basic income is a subject I take very seriously for many years. And I think turning inward in Corona times, it's times where we should address this issue a lot too.
So Donato is asking on LinkedIn, he's saying, will traditional banks survive the challenger neobank wave? And if yes, how?
If I knew, thank you for that question. I think the strong banks, yes. I think a lot of banks will survive. There are great banks, great services. They're already great and really advanced today. Speaking of the German banks, I think our main banks are the ones most in danger. There needs to be a SWIFT for every bank in the understanding of the customer. I just have myself the situation trying to get a loan, and I'm a serial entrepreneur. It is very, very complicated for me to get a loan from a German bank. incredibly complicated because I don't fit any kind of scheme they used to work with. And then they treat me in a way which was possible 30 years ago. You want money from us, give us, give us, give us, give us. If the bank keeps on behaving like that, they will lose and they will go bankrupt. If the bank adapts and understands, for example, the example I just used with the shared scooters, this bank will survive and it will have a great future because it already has the way better services and the more complete set of services to offer than any fintech company starting in the last 10 years.
Good point. So Christoph, the sort of the last question that I like to wrap up with is this: what is the advice you can give to global leaders around the world, especially in these uncertain times?
Yeah, I like three quick suggestions these times. First of all, and I think in YPO we hear it all the time, but it looks very basic, but it's complicated once we're in crisis. Focus on what you can control. Focus on the things you can do. The public measures and what Corona does to us, nobody of us can really influence it in the right way. We can support, but we can focus on the environment and the things which we can control directly. As this was a call for technology, I think it's very, very important for everybody to start defining technology different. Technology, as people talk to me and understand, is always, it's a cost position, and technology is something I don't understand. That's why it's technology. I think you should see technology as growth and opportunity. And by just changing that swift of view, you will be much easier in implementing new processes based on technology. And then last, there's an old, I believe, German saying, which I think is really helpful. Keep always in mind, a new day starts in the middle of the night. So let's start a new day and move forward happily.
Well, thank you so much, Christoph, for joining us today. And thank you for those who tuned in. If you enjoyed today's episode, let us know by sharing it with your networks and subscribing to our channels. Until next time, this is YPO Presents.
Thank you.